Okay, good morning. It's Monday, November 8th, and we're going to go over this market. I'm doing this very early in the morning. You guys can see here, 5:48 a.m. This is typically when I wake up to check the markets and see what they are doing before the open. So we're about maybe 42 minutes from market open here in the West Coast, and I want to kind of take you guys over what I go over and what I look at in the morning. I'm also going to break down the earnings week. That's something else we'll do, so let's get to it. But before we do, of course, please hit that like button, hit subscribe. I really appreciate it when you do that, and it shows me that I'm giving you value. That's my goal eventually, to guys teach and give you guys value, right? Let's go. So we're starting the day with Cnbc. We're looking at the pre-market numbers, and we're, of course, looking at the Dow, S&P, and NASDAQ. We're seeing that the futures are up. Of course, this is not an indicator that the market is going to do well today, but it kind of shows you which direction it's actually angling towards, which is good. So, of course, here we see that they're all pretty much positive for the day, so it's a good sign. We see also the price of oil and the 10-year bond yield. Okay, the price of oil going up is not a good sign. Of course, we've been watching that indicator, and the U.S. 10-year bond yield course moving up higher, just ticking up 0.03 higher for that, closer to that 1.5% range. We're also watching that because once it clicks up over that 1.5% range, it means money is flowing out of bonds. Okay, and it makes bonds more enticing to potential buyers. So that's what we're watching on CNBC. Also, the top news essentially is this Elon Musk news here that Tesla shares are sliding. We can see here Tesla shares in the pre-market going down by 54 points. Ouch, almost 5% on the day because of of his poll that he did about taxes and everything. So I get it. He's got a tax bill. He's got to pay it. But going about it this way here with a poll, I mean, guys, come on, man. Like, what are we doing? Like, if you're shareholders, like, how do you react to this? Like, we understand that it's, maybe he's trying to make it fun. I don't know, but Elon Musk, of course, as a Tesla shareholder, you have to account for his antics and for his kind of wackiness from time to time, which kind of hurts. But at the end of the day, it's up like a million % over the last couple years. So good for you if you have this, but at the end of the day, this is just a little kind of like a little headache you have to deal with, which is the kind of like awkwardness and unorthodox of things that Elon Musk does. So let's move on to the important stuff, which is the earnings week. All right, so we have before the open today, these companies reporting here. And I can tell you guys, I'm not interested in any of these companies here, so we're good to go there. But of course, after the close, PayPal is very interesting. I think that it's moved down recently and it's been beat up. Definitely worth a shot here after they tried to acquire what was it? Pinterest. Yeah, they're trying to acquire Pinterest, which is kind of strange. Maybe it could have been a smart move. Who knows? So interesting to see here because it's a very beat up stock. Definitely worth maybe picking up some shares or maybe looking into for picking up. I'm not going to pick up myself because I'm already too overstretched, but this is one worth watching if you're interested in these high value names and kind of big momentum names. Okay, Amc Entertainment. This is our meme stock, of course. Not interested in that. We're valuation people. We're not kind of like technicals and momentum people and meme people, as they call them. We're not those guys. So AMC, we don't touch that one. Okay, that's for the gamblers. Okay. Now Roblox is one that's very interesting. That's another metaverse type of play, but they had a kind of like an outage recently. So that's something to be concerned about when a video game, kind of provider, maker. Has outages. This is how we make money, and outages don't let you make money, and it kind of makes users not want to play in your platform. But at the same time, that's a metaverse play. It's for kids mostly, but it's been a smart play so far. So we'll see what happens there. But not interested in Roblox at the moment. Now, Virgin Galactic. This is one that we've traded in the past, and I'm saying traded because it's less than maybe like a 6 to 8 month play. For us, we bought this at 15, let it go at 47, and we did about maybe 160% gain on it, a little bit more than that. Very happy with that trade. Not looking to get back in it. This is some billionaire's pet project, which doesn't make money at the moment. It's not cash flow positive, not even close to being that, or even EBITDA positive. So not interested in that one. Now Lemonade is one that's a good one. This is an insurance. This is an insurance company, kind of cloud artificial intelligence type insurance. So with Lemonade, I tried to get some dog insurance for my dogs, and it was very easy to do that. So I was very impressed with the platform and how easy it makes it to shop for insurance. So I think this is probably maybe one of these future plays that may be worth a lot of money in the future, but as a long-term kind of thing, because I think it already prices in a lot of growth in its stock price. It sells on a price to sales ratio. I think it's very high. Last time I looked, not interested in adding something that high in a price to sales ratio. Now, Smile Direct Club, that's an interesting one. That's one that in the Discord we've been talking about for a bit. But I actually have some insight from some people that I know on this business, on the dental Invisalign type of product, or what they call aligners, right? Or I don't know what they call it, but aligners, of course, these Invisalign type aligners. And there's a lot of little players in this field. There's also some feedback I received that dentists, and specifically state by state, they have different rules of who they can kind of do business with. And on the West Coast, at least, dentists do not like using Smile Direct Club because it steals their business. So dentists, essentially, who would approve a Invisalign type aligner from Smile Direct Club don't like doing this, and will have their patients move to other aligners, which are not publicly traded companies, instead of Smile Direct Club, because they're stealing their business. So there's a whole kind of complexity there with dentists and how they treat their patients and how they want to keep patients for themselves and not give them up to some kind of online, big provider like Smile Direct or Align Technologies. Okay, so nothing else here. Actually, Zynga is one that I've been kind of looking at. I think it's sort of overvalued at the moment, but I think that it's an interesting idea for a gaming play, something like an EA Sports or a Take-Two Interactive, a nice alternative to those two, may be worth a look. And of course, moving on to Tuesday, we got Palantir, okay? That's one of our favorite stock, guys. We're looking for good things from Palantir. Of course, we're looking for this massive growth, maybe 35, 40% growth from Palantir. This is one of our biggest positions in the account. We own almost 500 shares at about $10 a share, okay? So if you have a lower cost basis, let me hear from you. I'd like to know you. If you have actually a lower cost basis than $10 a share, I would love to hear from you and talk to you, okay? Now, nothing else here other than United Wholesale Mortgage. This is the competitor to Rocket Mortgage. It has a very low market cap compared to Rocket Mortgage, and these guys have a very anti-competitive type of attitude in the sector, in which they're forcing their brokers to only do business with them or none at all. So they're not giving choice to brokers. So I don't like this stock here. It does pay a dividend, and it kind of moves the same as kind of like a Lending Club or a Loan Depot and a Rocket Mortgage. So those are very low kind of multiple stocks on a price to earnings kind of ratio. Very, very low, very cheap stocks. But of course, we're not going to ever buy United Wholesale Mortgage. We're buying Rocket companies, right? Now, nothing else here that interests me. NIO is that Chinese electric car maker. I think this is something that could be very powerful in the future, but of course everybody's looking for that Tesla replacement. Not NIO, not for me. No more Chinese exposure for me. But if you don't have Chinese exposure, NIO may be worth a look. But you need a lot of research into this, a lot of insight into the Chinese sort of car economy. So here, be warned. Enter at your own risk. This is a little bit of a volatile play, in my opinion. And of course, Coinbase. That's the crypto giant, right? We own Voyager Digital for the account. So this here is a good buy if you're willing to take the risk on a higher multiple stock, price to earnings, forward earnings, and maybe if you believe that Bitcoin, Ethereum are going to hit these record levels in the future, which I kind of do believe they will. Coinbase is not a bad buy. I think this is a stock that could be $600, $900 in the next 2 to 3 years. I think it's very possible. But with Voyager Digital, it presents a cheaper stock on a price to earnings multiple, and on a growth aspect, I think it's a lot more enticing for me, Voyager Digital, rather than Coinbase. But if you like Coinbase, take a look, all right? Now, Fubotv, this is one that there's a lot of hype around. I don't like this play. I really think that there's too many TV products and sporting products out there. And there's talk about NFL and soccer, European soccer, making it easy to see on Fubotv. But I see in the next couple years, these leagues like the NFL, the NHL, soccer leagues in Europe having their own streaming platforms. I don't see why they wouldn't have that. So I don't like Fubotv. I think this is something that's going to be kind of, technology will catch up with this, and the trend of kind of streaming sports is going to take more kind of hold over the next 2 to 3 years. So don't like Fubotv for the future. Now, Plug Power, this is one, there's a lot of retail money in here, guys. There's a lot of kind of like you and me money, just regular investors putting money in here. I don't know that there's a lot of institutional money here, but be careful with Plug Power. That's hydrogen power, not electric power. So, for vehicles and such, be careful with this one. It has a really high, earnings multiple. So, of course, Wynn Resorts, that's the next one. So we're looking for good things from Matt Maddox. These guys always put up a really, really good conference call. Very comprehensive. They answer the questions very well. So the one thing to note is that Wynn Resorts most of the time will go down on earnings. And if it does, if it hits anywhere under 90, I think it's a solid buy. Of course, we've had the troubles with China and the crackdown and the license that renews next year. But we've been told over and over again that there's no worry about these licenses. We're also watching the Macau news, and there's no indication that the license won't be renewed. It's sort of like a given at this point. So Wynn Resorts, I think it's always a good buy, especially if it's under 100. Consider your entry point, of course. Try to make it as conservative as possible. But anything under 100, I'm always totally okay with Wynn Resorts. Okay, now Unity Software. This is one of these kind of AI type artificial intelligence plays that work really well, but they're always, of course, very overpriced. So be careful with these guys. Okay, now here, nothing interesting here, not even DoorDash. And then here, nothing interesting on Wednesday, but after the close, SoFi, that's this fintech type of play, the application, kind of like online bank that has a trading platform. Their stadium, the Rams and Chargers Stadium is named the SoFi Field. So I think there's a lot of good momentum with this stock. Definitely worth a look. It's ran a little bit since I was looking at it. I was trying to see if I could buy it maybe in that $12 range. Let's take a look at what that is. So here we see a year-to-date chart, $22 a share trading at the moment. Aftermarket, $22.68. But here we're looking at a chart, and we're looking here. Excuse me, let me put this aside so we can get the money here. So $15, $14 is the lowest it's been. Okay, I'd maybe start a position at about that much, but since it's run to 22, definitely not interested at that range, specifically with negative EPS. Let's see what the price here for SoFi, 22 times sales. Yeah, definitely not in that range in which I would be a buyer. Maybe 10 times sales I would be a buyer because it's not a cash flow positive. It's not a profitable company at this time. So we got to be very careful with these guys. Moving on here, Disney. Okay, Disney is one that I think that is kind of overvalued at the moment. I think that the park's opening is priced in. I think that Disney Plus is priced in. I don't see a lot of people signing up for Disney Plus anymore. I think that big sort of contingent of people that during the lockdown signed up for Disney Plus already have done so, and people that have free year of Disney Plus through their Verizon plans and such, they already have it, and it's cheap. Just kind of like Netflix is cheap. So I don't see a lot of people canceling it and redoing it. So I think there's a lot of good things priced in here. I think the stock can run maybe 200, 210, 220, but not much more than that. So this is a trade, not an investment at this moment, okay? Not interested in Wish. That's a meme name. Affirm is very interesting because it has that kind of Amazon, Walmart appeal of, kind of like buy something and pay for it later, buy now, pay later, buy now, pay later, Bono, or whatever the acronym is, buy now, pay later. So not interested in this. It's ran way too much. The price to earnings multiples are way too high. Not interested in there. Of course, Beyond Meat, this is a stock we used to own. Problem is execution, guys. This management cannot execute, and it's kind of sad because I think it's a really good business, and I think it has a lot of R&D on the flavors of meats and such, and trying to replicate flavors of sausage and turkey and all kinds of stuff that these people want. These people who want beef replacements or plant-based replacements for meat are looking for. Now, Tattooed Chef, okay, this is one that we own for the account. So I think that there's going to be a huge growth number here. And I think it's going to beat the expectation because we're seeing Kroger pick this up. We're seeing Walmart pick this up. And a lot of these little providers, these little kind of retail stores, pick this up and get orders in. So I think that we're going to see some good growth numbers here, but that could also be something that the street is already expecting. But I think that the numbers are going to be good. We need to see this company grow and branch out some more. We'll keep following that as we go forward. Okay, nothing else here that interests me, and nothing here that interests me. Tapestry, I've had Tapestry in the past. That's your Kate Spade, Stuart Weitzman. I think that's already ran as much as it can. And here on Thursday after the close, we have Lordstown Mortars. This is one that people got messed up on this stock because it's essentially a SPAC, special purpose acquisition company, that was selling the promise of a business when they really had not much of a business, and people got hurt very much. Let's take a look at a chart of that real quick. And here we go, guys. Here's a year-to-date chart of Lordstown Mortars, and it's just pain for Lordstown shareholders when they were buying back in the 20 range, man. Even in the 10s, it's just pain all over. So sorry about that, guys. It happens. But when you put money in a stock that gives you the promise of a business, this is what may happen to you, and it happened to the shareholders there. So sorry, really bad to see that. And here we go for the end of the day. Nothing else interesting here worth talking about for this breakdown. Okay, so that's going to be it for this morning. I'll be doing some more kind of my takes on some earnings that come out. Dropbox, Skyworks. We have these guys coming out this week here. We have Palantir. That's the big dog one. I'll do a breakdown on that as well. And then we'll hopefully you guys get some good info there. Have a good week, guys. Peace out.